This is Al Brooks. Thank you for watching the Brooks Trading Course. This is the third of 3 videos on trading in the middle and the end of the day. The close of every bar is important, and therefore traders pay attention to what the bar is doing as it's closing. It's often testing support or resistance, and that's true on all time frames. And therefore, at the end of the day, traders pay attention to what's going on with the 5-minute chart. Is it testing prior support and resistance on the daily chart, on the weekly chart, on the monthly chart? The final hour of the week, is the market testing support or resistance on the weekly chart? The final hour of the month, is it testing support or resistance on the monthly chart? And therefore, there are often moves that take place right before the daily, weekly, or monthly chart close, and they're related to support on the higher time frames. Higher time frames do offer support and resistance. However, for example, on a monthly chart, monthly support and resistance does not come into play very often. However, it is especially important in the final hour of the month. This is a 5-minute chart of the euro versus the dollar. An important function of the middle of the day is to test support and resistance because it often leads to a move, a swing up or down at the end of the day. If near the end of the day the market is within striking distance of an important support or resistance level on the daily, weekly, or monthly chart, there will often be a reversal for a swing trade at the end of the day. What about at the end of the session, the end of the American session, the end of the European session? That's true as well, but it's more important at the end of the day, which is the end of the U.S. session. The U.S. session is the third of 3 sessions. It's the final session of the 24-hour trading day. There is no exact open for the U.S. session. Traders simply look for a strong trend bar up or down, or a series of trend bars up or down in a particular time window when the U.S. market becomes active, which is usually around 5 o'clock or 6 o'clock Pacific time. Here we are around 5:30. The market has a bull bar, not particularly convincing, but it's in the window when traders start to look for the open. We went up, we went down, we went up, we went down. The market's beginning to probe up and down for direction. The open of this bar might be important at the end of the day, and the middle of this range might be important at the end of the day, because it's the open of the session. This is much more important when you're trading stocks or futures that have a clear open of the day. For trading Forex markets, the open of the day is the beginning of the Asian session. However, the beginning of each session is important as well. The market often comes back to the beginning of the session at the end of the session. We know that the session opened somewhere around here, 5 o'clock, 6 o'clock in the morning. It traded up some, it traded down some. It's a trading range day. And when that's the case, the opening range, sometimes there's an exact opening price. Well, here it's more of an opening range. It's a magnet at the end of the day. So if the market is above it at the end of the day, it'll probably get drawn down to it. If it's below it, it probably will get drawn up to it. Therefore, traders should look for a reversal late in the day to get back toward the open of the session and back toward the open of the entire day, which is the open of the Asian session. You can see the market keeps oscillating around this opening price. It went above it, went below it, reversed up, and went above it, reversed down, went below it, reversed up, above it, reversed down. We're below it. Well, what do you think it's going to do? Probably reverse back up. We're above it late in the day, probably going to reverse back down. This is the dollar versus the Canadian dollar, 5-minute chart. The market is starting to get bigger bars here, so a lot of traders would consider this or this the beginning of the U.S. session. The market's in a bear channel. but climactic, series of climaxes, bear bars, good bull bars, bear bar, pause, bear bar, pause, now a micro double bottom and a reversal. This looks like a bear leg in a trading range, and therefore traders will look for a bull leg in a trading range. However, the channel is tight, and therefore traders probably will need a major trend reversal before they can get much of a swing up or down. The first leg up, even if it's strong, is usually a minor reversal, and that means the trend typically resumes. Once it does resume, traders begin to look for an even stronger minor reversal. They hope that instead of a minor reversal, they get a major reversal. We have gap bars. There's a gap between the low of this bar and the moving average. There are 3 gap bars here, gap between the low of the bar and the moving average. When you have a bear trend and then a rally that puts bars completely above the moving average, that's a sign that the bulls are getting strong. They're able to put bars completely above the average price. Typically, the reversal up is minor. That means the bear trend will resume. However, this is a sign of strong bulls, and therefore, if the trend resumes and starts to reverse up again, traders will look for a possible major reversal into a bull trend. And here we have it. We have a triangle around this high. If you want, you can call it a double bottom major trend reversal or a slightly higher low major trend reversal. And when you have a major trend reversal, you have a 40% chance of an opposite trend, 60% chance of either sideways or the bear trend continuing. We're getting late in the session, and traders are looking for a final swing. This is a reasonable buy setup. Traders can buy on a stop, preferably above a bull bar, so they'll buy on a stop above this bar and get filled over here. For a protective stop, they can put their stop just below this low, which turns out is a perfect double bottom. Weak rally. We have 4 consecutive bull bars, but the bars are small, so this is unlikely to be a strong trend. Also, we're late in the session, and typically the session ends up entering a tight trading range. Sometimes you get a series of big bull trend bars and a big move up. It's worth taking the buy. However, once you start to see the bars going up and they're very small, and here we're getting some doji bars, there's probably not much left to the day, and traders will take profits late in the session once they start seeing the market entering a tight trading range. If you're trading a 5-minute chart, then support on all higher time frames, the 15-minute, 60-minute chart, 2-hour chart, 4-hour chart, daily chart, weekly chart, and monthly chart are important. This is a daily chart of the euro versus the dollar, and here's a 5-minute chart. This is the U.S. session. The close of every bar is important on every time frame. On a 5-minute chart, the close of this bar, the close of this bar, the close of this bar, every close is important. And you have to be thinking of it as possibly testing important support or resistance. We have a big bear close, it's testing a prior low. We have a series of bull closes, they're testing prior highs. The close of the bar means the final trades of the bar. When the daily chart is closing, the final trades that take place on the daily chart often test prior support or resistance. For example, prior highs, prior lows, the close of prior bars. And therefore, right before the daily bar closes, traders will look for moves on the smaller time frame charts, the 5-minute chart, that will go toward support or resistance. Support or resistance on the daily chart right before the bar closes becomes magnets, and the market often gets drawn to them at the end of the day. Remember, the U.S. session is the third of 3 sessions, and it is also the end of the day on the daily chart. When the day is ending, traders always should be aware of support or resistance on the daily chart because the market will often get drawn to that support or resistance. If you're in the final hour of the week, in other words, a Friday, the final hour of the week, pay attention to weekly support or resistance because the market will often get drawn to it. When you're in the final hour of the month, look at the monthly chart and look at prior highs, prior lows, last month's close, those are magnets, and if the market is near those prices on the 5-minute chart, it'll often get drawn to them. Therefore, be prepared for a trend in the final hour toward that higher time frame support or resistance. The U.S. session is the end of the trading day, the final third of the trading day, and here we see repeated strong reversals down. We're seeing reversals up as well, but repeated strong reversals down. Here late in the session, strong. Look at this. The market is deciding whether or not it's going to be able to break above the high of 2 days ago. We have a pretty good bull bar here. We have a high one bull flag, a pullback, and we broke out. Today is the entry bar for the breakout above this bull flag. And the market repeatedly is trying to become a strong entry bar on the daily chart. The bulls want the bar to close far above this high, yet every time it gets above the high, it gets drawn back down below that support level. And therefore, if we have a rally somewhere late in the 24-hour day, somewhere in the middle of the U.S. session, be prepared for a reversal back down to that magnet or to this magnet, the high of this bar, or even the close of this bar yesterday. Here's yesterday's close, and you can see, even though it kept getting drawn back down, it could not get below yesterday's close. For the bears, they were able to keep it below the high of 2 days ago and create a weak buy entry bar, a close below the middle. The bulls were able to keep it above the high of the buy signal bar. So the bulls had some strength at the end of the session. Here's a daily chart of the euro versus the dollar. And here's a 30-minute chart. This is the start of a session. Right here, this line is the start of a session, the end of a session, the start of a session, end of a session. These 3 days correspond to these 3 bars. We have a doji bar and a doji bar. That increases the chances that today's going to be a doji bar. That means it increases the chances that if we have a strong rally, the rally will fail and try to get back down toward the open, just like it did on the prior 2 days. The close is near the open on both days. Here we are around the start of the U.S. session, and we're far above the open. We're near the high of the past 2 days. Traders should be prepared for a possible reversal back down. Strong rally. Well, this tail at one point was a strong rally, and here it is a strong rally. But we have 2 prior doji bars. Traders need to be thinking that today could be a third doji bar, and for it to be a third doji bar, there will be a strong rally that will reverse down, and therefore traders should look for a possible sell setup. And here we have 4 consecutive inside bars. Inside, 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 inside. That's a triangle, and it's a potential reversal pattern. Here's the first of the 3 days. Here's the open of the day. This 5-minute bar is the open of the day here. The market rallied, it sold off. It sold off sharply. It rallied sharply. Look where it ended up, closing just a little bit below the open, creating that bear body. Here's the next day. This day, the market opened with the open of this 5-minute bar. It traded below, reversed up. It traded above, reversed down, and then reversed up again and closed just a little bit above the open. Here's the open, and the close is a little bit higher, and you have a small bull body on the doji bar. And here's the third day, right here. This bull bar is the open of the day, and the market rallied strongly. However, the past 2 days closed near the open. There's an increased chance that today will try to close near the open as well, and traders therefore should be looking to sell a reversal down if there's a sell setup, and there is. You can call it a parabolic wedge, 1, 2, 3. You can call it 2 big legs up in a trading range, 1, pullback, 2, and now we have a sell signal bar, an I, 4 consecutive inside bars. That's a potential sell setup. Weekly chart. the market is trying to close below last week's low. It's a very big outside down week and a big bear bar. On Friday, in the final hour or so of the week, traders are going to pay a lot of attention to the low of the prior week. Will the bears get a close below that low? Therefore, this low is an important magnet. If the market's a little bit above it, the market will try to sell off below it. If the market is a little bit below it, it'll try to rally back above it. The bulls will try to get it above it. So, in the final hours of the week, traders should be paying attention to the weekly chart. The final hours of the week take place in the U.S. session. Here we are at the low, strongly bearish, weekly chart strongly bearish as well. But we're near last week's low, and therefore traders should look for a possible reversal up to test last week's low. This is a Friday, and therefore traders should look for tests of weekly support and resistance. Most important, the high, low, or close of last week or of any prior weeks. This is the low of last week right here. And with a few hours left to this week, it looks like we have a potential final flag, and it looks like the sell-off is getting weak. Traders therefore should look for the market to get drawn back up to that close. The bears are failing to get a strong breakout far below last week's low, and there's not much time left to the week. If they cannot get it far below the low, a lot of them will buy back shorts. That could cause a rally. And the bulls will see that the market is not far below last week's low, and the sell-off is not all that strong. Maybe they can get a rally back up above last week's low. Therefore, traders should look for a test back up to last week's low. The bulls are repeatedly trying to reverse up to get above last week's low. At the end of the week, you can see here's the close of the U.S. session, which is also the close of the 24-hour bar. And since it's a Friday, it's also the close of the week. The bears succeeded in getting a close below the low of last week. The bulls succeeded in preventing a close far below the low of last week. Traders will look to buy above this bar, looking for a test back up. When they get it, and then it's stalling, and there's a second entry sell, most traders will exit. And since we're getting very late in the session, 11:30, 12 o'clock, most traders would just go flat for the remainder of the week and not trade this. Monthly chart, very strong bear bar. Here's the current month, and this is the final bar on the 5-minute chart of the month. Late in the month, traders should begin to pay attention to monthly support and resistance. Last month's high, we're not near it. Not important. But we're near last month's close and last month's low, and therefore they could be magnets at the end of the month. This is the approximate start of the U.S. session. The bears are trying to sell off strongly below last month's low, and once they get below it, what's going to happen? Are they going to be able to keep it below last month's low, or will they be disappointed that they're not very far below last month's low and maybe buy back some shorts? And will the bulls look at the bears giving up, and will the bulls buy to get back above last month's low and possibly all the way back up to last month's close at the end of the month? This pink line is last month's low, and here we are at the end of the month. This is the start of the European session. The market is clearly repeatedly testing last month's low. The traders are deciding, are they going to reverse up from below last month's low and maybe get above last month's close and maybe even get a bull bar this month? Or will the bears be successful and get a breakout below last month's low and a close below last month's low? The bulls repeatedly tried to get back above last month's low, and they were not able to get very far above. Bears are looking for a sell, maybe a wedge, 1, 2, 3, a failed head and shoulders bottom. This is also a higher low major trend reversal. The bulls are failing to get a strong breakout above the support of last month's low, and therefore The bears may try to get a close far below last month's low. Traders need to be ready for a swing down. If the bulls got a strong reversal up, traders would start to look for a rally that would take us back above the close of last month. The bears sold aggressively through here, knowing that the bulls are giving up. The bulls have decided they're not going to be able to close the month above last month's low, and the bears are trying to push down as far as they can. The month reversed down. It rallied early in the month, and it sold off late in the month. Good for the bears. Last month was a strong bear bar. Good for the bears. The bears, therefore, want a confirmation bar this month. They want this month to close below its open to have a bear body, and they want to close below last month's low, and they want to close very far below last month's low if they can. Strong leg down. Probably at least one more leg down, and here we have one more leg down. Very big bear bar, late in a trend, possibly an exhaustive move, plus a big tail. Pretty good reversal up. The bears are trying to get trend resumption down, and instead we got a very strong reversal up. Higher low, major trend reversal, final flag, double bottom. Maybe the bulls will get back above last month's low. The bulls will buy looking for a rally up at the end of the U.S. session, which is also the end of the month. However, they got a close here, which is right here, the close of this bear bar, below last month's low. The bears won. They got a bear bar, but they did not get a big bear bar. They sold in here. Climactic reversal, a lot of them get out there, and this big bull bar is where the remainder of the bears gave up, and aggressive bulls bought, trying to get a rally all the way up here. Here we get a wedge, 1, 2, 3. A lot of the bulls would give up and exit below that bar right there. At the end of any session, the market often goes quiet, but especially at the end of the U.S. session, the market tends to enter a trading range, a very tight trading range. Usually around 11 o'clock Pacific time, the market enters a tight trading range. Sometimes it enters a tight trading range very early, here, about 9 o'clock Pacific time. So the final 4 hours, we're in a very tight trading range. It's dead money. By dead money, what I mean is if you use your money to trade this market, you're not going to get anything from it. If you want to be trading and this chart looks like this, you should not trade this chart because your money is just going to sit there dead, doing nothing, not earning you any money. You should look at other markets to trade. Sometimes in a tight trading range, you can get a 10 or a 20 pip scalp. However, it often takes 1 or 2 hours to get to your target. In general, traders should not be trading when the market looks like this, but some aggressive scalpers will trade looking for a 10 or 20 pip scalp. There's still plenty of time left in the session. Most traders should not trade this. We're in a trading range. We're getting lower highs, and it looks like we're trying to get higher lows. And therefore, bulls will look to buy below bars, especially above bull bars at the bottom, hoping for at least a scalp up and possibly trend resumption up. Maybe we'll get a double bottom, this low and that low. However, when the bars look like this and we're getting late in the day, we're probably going to continue like this for the remainder of the session. Whenever you have a tight trading range that has 3 or more legs in it, you can also call it a triangle. If there's going to be a breakout, there's a 50% chance the breakout will be up. There's a 50% chance the breakout will be down. There's also a 50% chance that the first breakout attempt will fail. If a person buys a reversal up near this prior low, they'll put their stop below that low and they can hold long as the market does not hit their stop, hoping that the market drifts up maybe to the top of a major lower high up here. If it does, maybe they'll make 30 pips. It looks like we're trying to hold above this low. We got 3 legs down, 1, 2, 3. So it's a wedge bull flag, and it's a slightly higher low and a double bottom, maybe entering a triangle, lower highs and possibly higher lows. If you bought above this bar or above this bar or above any of these bars and put your stop just below this higher low, your risk was 14 pips or less, and you're hoping for a test up here to make 20 or 30 pips. Again, once you have 10 or more bars in a tight trading range, especially when you're at the end of the day and late in the US session, most traders should not trade. However, some traders will take the trade and they just patiently wait. They buy above this high, they're risking about 10 pips or so to just below that low, hoping to get up here, and then late in the session, on a reversal down, they'll get out and maybe make 10 or 20 pips. The math is okay, but to hold on to a trade for 2 or 3 hours to make 10 pips, 20 pips, it's usually not worth it. Depending on where you bought. If you bought here, you'd get out with 13 pips. If you bought here or here and then exited below that bear bar, you'd end up with 8 pips profit. Maybe the trader's equation is good here, maybe here, but this late in the session, I would never trade it. In general, once you have 10 or more bars late in the session, late in the day, I stop trading and I look to trade other markets. Market is rallying strongly, but now it's starting to get doji bars. We're in the middle of the US session, maybe a little bit early in the US session, but doji bars here, doji bars here. It's often a warning sign that the market's soon going to enter a tight trading range and become dead money. We have a possible wedge, 3 pushes up, 1, 2, and then 3. Possible parabolic wedge, 1, pullback, 2, pullback, 3, micro double top, and a bear bar. Some bears will sell below the low of this bar, looking for a test down to prior major higher lows like here or here, possibly a reversal day all the way down to here. Other bears will wait until they get 3 or 4 bear bars and then sell closes. Others, after they see 4 bear bars like this and a wedge rally, will sell with limit orders at the high of the prior bar. They'll sell with a limit order at the high of this bar and then get filled right here. And they'll put a protective stop up here, hoping for a swing down. And the bears got a very strong trend down. They got about 10 or 15 bars down in a very tight channel, testing a major higher low. And now we're getting very late in the session. Reasonable to get out above this bull bar, a micro double bottom, down, up, and a slightly higher low double bottom after a strong bull trend. This may not go down much further. Reasonable to get out of shorts above the high of this bull bar. This is late in the session, late in the US session, which also means late in the day. And now we're starting to get very small bars. A doji bar here, small bar here, series of small bars here. The market might be entering a dead money tight trading range, in which case it's usually better just to exit. If it continues strongly up or down, you can trade again, but this is a warning sign that this may be the end of good trading for the remainder of the session. TTR, tight trading range. If you want, you could hold for the remainder of the session looking for a second leg down. Very tight bear channel. Reversal up, probably minor, which means either a bear flag or a trading range. In both cases, it'll probably test down a little bit. So you could hold through all of this and try to make a few more pips. Maybe you'd make 5 or 10 more pips getting out at the end of the session. Late in the session, traders will exit shorts above a bull bar, like above this bull bar. Once you start to see small dojis, if you're holding onto your short, you may have to hold for several hours to make any significant additional profit. This is late in the European session. Here we have a sell to close bear trend late in the Asian session. And now we have a buy the close rally very late in the Asian session. Whenever there's a sell the close or buy the close trend late in a session, you have to be prepared for a reversal. It's a good example of risk can happen fast. End of the Asian session, a big sell-off, probably related to some news at the start of the European session, and we have a sell to close finish. Traders are selling closes. Big bar. Also, once you're 4, 5, or 6 bars into a sell to close trade at the end of a session, it's probably not going to go down much further. Also, we're at a support level, so this is a lower probability sell. If the market's in a sell to close trade at the end of a session, traders should get out 3 or 4 pips, 5 pips above any bar, including a bear bar, and they should get out even 1 pip above a bull bar, especially a bull bar closing above its high. When you have a sell to close bear trend at the end of a session, and then you get a bull bar, the bears are going to buy back their shorts, especially here, possible failed breakout below a trading range. Not only that, aggressive bulls will buy above a strong bull bar like this, betting on a tradable reversal up. Might be good for 10 or 20 pips. Sell the close bear trends at the end of a session, buy the close bull trends at the end of a session, usually only last 4 or 5 bars, sometimes 6 bars, and then they either stop or they reverse. Traders can sell closes. This is the 6th bar in a bear reversal and the 4th big bar when it clearly is sell to close at this point, maybe at that point. Here we have a bigger bear bar. It's still possible sell to close, and you can even sell this close as well. However, once you get a bull reversal bar like this, you should get out just above its high. And if you're able, and you see this bull reversal bar, a lot of bears will place a limit order to buy back their shorts at this close, or maybe slightly above for a small loss. And you can see what happened here on this bar. It got just below that close and it reversed up. Now, why did that happen? Because the sell to close bears were disappointed by this bull bar, and they know everybody's going to buy above this bull bar. The sell to close bears are going to buy back their shorts, and the bulls are going to buy for a scalp up. And this tail on the bottom of this bar represents the sell to close bears buying back their shorts and aggressive buy the close bulls buying at that close. Once they see this bar, they're expecting the bears to buy back their shorts. The bulls will place limit orders to buy at that close as well. When you see this reversal, micro double bottom, down, up, it's telling you that the bears are going to buy back their shorts. They are buying back their shorts, and the bulls are going to buy, and we're probably going to get a profitable trade up. Bears exit 1 pip above the top of a bull bar. And since buy the close or sell the close trends at the end of a session only last 4 to 6 bars, traders have to be ready for a reversal. Bulls will buy exactly where the bears are getting out. They'll buy 1 pip above the high of this bar. And really aggressive bulls, after they see this good bull bar, will buy with a limit order at the close of this bar, and they'll get filled right here. They'll place their limit order either at that close or a pip or 2 above. 5-minute chart of the euro. We're at the top of a bull channel, and we're trying to get a bull breakout above the channel. The market went above and down, and went above again, and is starting to go down again. This is late in the Asian session, and the European session is about to begin. Should you be buying closes up here? Well, here it's buy the close, but now we have that reversal down. The bulls are trying to get trend resumption up again, but are these good buy the close bars? No, they're small. We have tails on top. We have dojis. We're at the top of a channel. I would not be buying closes here. If traders did buy closes, they should exit 3, 4, or 5 pips below any bar and 1 pip below a bear bar. Here's a bear bar. If bulls are still long, holding below this bull bar, they have to get out below a bear bar because risk can happen fast. You can get a very fast reversal after a buy the close rally, especially a buy the close rally at the end of a session. You have to get out below that bear bar. If you bought these closes, you have to get out. We're getting a reversal at the end of the session and at the start of the European session, and the context is good. We have a spike pullback channel, a failed breakout above the top of the channel, a micro double top, a buy the close buy climax that looks lousy, weak, and now we're getting a strong reversal down. The bears know the bulls are giving up, and therefore the bears will sell exactly where the bulls are selling out of their longs. One way to sell is on a stop just below the low of this big bear bar, knowing that the bulls are giving up. The close of every bar is important, and it usually is an important test of support or resistance. That's true on the 5-minute chart. The close of the current bar is testing some prior support or resistance. And it's also true on the higher time frame charts, the 60-minute chart, the daily chart, the weekly chart, and the monthly chart. Therefore, in the final hour or two of the day, the final hour or two of the week, the final hour or two of the month, if you're trading the 5-minute chart, pay attention to possible support or resistance on the higher time frame charts. If this is the last day of the week, pay attention to weekly support or resistance, last week's high, last week's close, last week's low, in the final hour or two of the day, because that price could be a magnet. If this is the final few hours of the month, the final 5 hours of the month, pay attention to monthly support or resistance, because the market might get drawn to it in the remaining hours of the month. I'm Al Brooks. This is the third of 3 videos on trading in the middle and the end of the day.